What's good, y'all? So today I'm going to be breaking down a trade I took today on the NASDAQ that would have netted you about $700 if you decided to do the same. So let's get right into the charts. So looking at the NASDAQ today, this morning going into the day, if you look, you see that we had created a 1 hour buy side imbalance, sell side inefficiency here at 1 a.m. on the overnight London session. So that was one thing I noticed this morning looking at the charts, and we inverted that at 4 a.m. today. So immediately at that time, what I did was look at the S&P 500 to see what the S&P 500 was doing as well. So I'll go ahead and pull up that chart. This 4 a.m. or this 3 a.m. high on the NASDAQ took out the London session or the New York session highs from Friday, right? The Friday 1 p.m. highs, as well as the 6 p.m. highs from Sunday night. However, on the S&P 500, you can see that that same high failed to take out the Friday highs, right? So we had an SMT divergence with both of these correlated assets, right? So NQ, the NASDAQ took out Friday's high while S&P 500 failed to. So anytime you see two correlated assets fail to make the same move, as I always say, that's an indication price is headed in a certain direction. So in this case, because we failed to take out the high on the S&P 500 while the NASDAQ did, we should have a bearish bias. So going into this morning, my bias was bearish. So let's go back to the NASDAQ chart. So as you can see on the NASDAQ, like I said, we had this inverted fair value gap on the hourly here. So that was another indication that price was headed lower, as well as a new 1 hour CIVI created here as well, right? We had a change in state delivery on the 1 hour time frame. So this essentially meant that we were now in sell side delivery on the NASDAQ. So now going into this morning, I was looking for opportunities to take a sell. As I always say, you only want to be selling short in a premium market, right? And buying long in a discount market. So because our high this morning took out these highs, right, from 1 p.m. and 6 p.m. and this low from 6 p.m., we now formed a dealing range, right? This price run took out the high and the low. Anytime one price run takes out the high and the low, we have a dealing range. So what you should do is once we have a dealing range, you want to find where the premium of your market is, right? Premium is always going to be the 50% and above, right? If you want to, if you're short, if your bias is short, you want to be short at the 50% and above mark, right, of your dealing range at the 50th percentile. So we have our dealing range here at 21,646. So at 21,646, I was only looking to sell if we traded into 646. Otherwise, I wouldn't have taken any trades today. But let's kind of look into the 1 minute chart to see how this trade played out today. So you can see here on the 1 minute, we're coming into 9 a.m. And we have engineered liquidity above us, right? All these highs are engineered liquidity, right, that the market is waiting to take out. And we have engineered liquidity below us, right? These lows are equal lows. This low, right, is from the morning session. That was going to be a great target for any shorts, right? All these lows would be a great target. But I wanted to see manipulation of these highs first into our 50th percentile of our dealing range, right, into a premium market. So that being said, if we fast forward now, we can kind of see how the price action played out. So again, just waiting, not really looking to do anything prior to the market opening. But as we did get closer to the market open, you could see we started rallying higher and began engineering more liquidity, right? Forming more highs going into this opening session, New York session. So right when the market opened at 9:30, you see that we dumped lower and took out these lows, right? We took out these lows and then we rallied higher and took out these highs. So immediately I was not interested in anything, right? At this point, I'm not interested in anything because, again, I'm only interested in shorting if we're in a premium market, which is anything above the 50 percentile of our dealing range that I just laid out. So from here, you can see we traded into our 1 hour sell side imbalance, buy side inefficiency here. But again, I'm not interested in shorting until we get into our dealing range, into the 50th percentile of our dealing range in the premium. So I was willing to let this go without me completely this morning. I was going to literally sit this out because if it wasn't going to get into the premium, I wasn't going to take it. However, the dealing range, the mean level or average level, the 50th percentile of our dealing range is a magnet for price. Price many times does want to trade into there before it makes its move higher, while the S&P 500 at this time was already trading at the 50th percentile. So as we continue to fast forward this, you can see what happened was we had now formed liquidity at this high, right? So when the market dumped here, there were new buy stops above here. So now the market knows, because there's buy stops, before we make the real move, we need to go get those stops. So you can see we continue to push higher into the SIBI, and boom, we hit the 50th percentile of our dealing range. So now we had traded into a premium. So now I was willing to look for a short opportunity at this point in time. So you can see what essentially I was watching for was an order block or a change in state and delivery, right? So I wanted to see an order block form potentially here at this series of up close candles. I wanted to see this open price get traded below for a change in state and delivery with some sell side imbalances created, right? SIBIs, bearish fair value gaps, right? So if we continue to fast forward this, you can see we traded into the 50th percentile of our premium, wicked above it, took out all these stops, right? All these stops had not been taken. Now I was watching for this to get close below. And you can see we got that here. So at this point now I'm waiting for a retest of this order block, right? So the market trades down and then we push back up. And now this is a great opportunity for me to enter short. And this is where I did enter short this morning. So you can see if we set a, let's see, I can show you here. If we put our stop loss above here, right? Because if price is truly going to go down, if we're truly in a sell program at this point in time, we should go lower. Targeting, your first target could be here at these opening lows, or you could have even targeted Friday lows down here, which were a little bit lower for about 60 points. So either of those could have been great targets. So you can see here, this is where I sold 5 short. So I entered short here, stop loss above this high at 9:50 a.m. In our macro, right? So we're at key time as well. And let's see how this played out. So we pushed down lower, pushed a little higher. Again, stop loss above here. We would have never stopped out at any point in time. Pushed a little lower here. And then at this point, we had our change in the state of delivery. So the market now was in a sell program. And that gets confirmed once we see this sell side imbalance, buy side inefficiency created here on the 1 minute time frame, right? So if we mark this out here, if we mark this out here, you can see if we're truly in a sell program, price should never close back above this sell side imbalance, buy side inefficiency, right? So let's see, because now we had hit our order block, traded out of it, came back, didn't take this high again, but traded back into the premium of our dealing range, and then came back down, right? And now formed this imbalance. And so now price essentially should continue further. And you can see here, we traded up into this, but we never closed above it. That was a key thing here. We never closed above it. We traded higher, but we never really closed above it. This was a mohawk. You don't really have to consider that a close above. That's literally algorithmic. So price came up here, rebalanced this gap and pushed lower. And at this point now, it's just about patience and holding to target. I will say this was a very difficult trade to hold. Usually these trades run a little quicker, but this one was a little bit more difficult to hold. And you can see here, we continue to get delivery, and we never inverted this gap right here, right? If we would have traded above this, I would have got out this trade here, right? Because at this point, we're not in a sell program yet. If you're truly in a sell program, all premium arrays should be respected on the way down, right? If you're in a buy program, all discount arrays should be respected, right? So this imbalance should always be respected. If we're truly in a sell program, order blocks should be respected. Propulsion blocks should be respected if we're truly in that sell program. So you can see we continued lower here. We pushed a little lower here, and then we finally got a dump here at around 10-11 once that macro ended. Traded a little bit higher. Now we have this order block created here. We had a few order blocks. Actually, we had this order block, which was created, right? So we should never close above here if we're truly in a sell program, right? And then we had this propulsion block, which is these two up close candles. So if we're truly in a sell program, we should respect those candles. And so we do get that here. We continue to trade lower and lower. And again, we come back. And this is why I said this trade was harder to hold, right? Because we came back and retested this order block again, but we never closed above it, right? If we're truly in a sell program, we should never close above these down close candles, and we don't. So it's just about trusting this trade at this point in time, right? All the way to target, right? All the way to target, which is here at these 930 lows. Right? And then we finally get delivery of those lows here, which is where you could have exited this trade, or you could have exited, like I said, at the lows down here for the Friday lows. So that would have netted you about $600 if you took 5 micro contracts on the NASDAQ on this trade this morning. And then the market continued to dump. So if you buy here, you could be fully out here, but you could have also held a few more to completely, this was a huge sell-off, right? Could have trailed your stop. We didn't get any change in state of delivery at all, right? As long as we were closing below these imbalances, you could continue to hold this. So we didn't close below an imbalance until we got here. Or sorry, we didn't close above an imbalance until we got here, right? So, but it was continuous sell side delivery all morning long. So this was a great trade where you could have just trailed your stop and kept trailing it lower and lower. So yeah, that was a great trade from this morning. Many great opportunities, I think, going into this week. So super excited about that. But the biggest thing here was that you wanted to see, before you enter short, you want to make sure the market has traded into a premium, right? If we've traded into a premium, then you can look for sells. If you're long, you want to make sure the market has traded into a discount of your dealing range before you look for buying opportunities. And you can see we got continuous downside delivery all the way to these lows down here. So you could have literally held this trade all the way down to the 21,443 lows from 21,644. So nearly 200 points on this trade. So great price action this morning. And I'm looking forward to seeing what we get tomorrow. But other than that, that's really all I got for y'all in this video. Yep, I will catch y'all tomorrow.